Now, this also comes ahead of the all-important retail sales data that's coming out later today, measuring the state of the economic recovery. Economists predicting a slight decline for the last month, that after June's reading showed a little bit of a surprise jump. And of course, earnings season continues. Second quarter results out from both Walmart and Home Depot. Walmart seeing a solid quarter, revenue up over 8%, driven by a strong grocery and back-to-school spending. Home Depot, meanwhile, also topping estimates, but shares are down pre-market. That is, the company logged fewer customer visits over the course of the last quarter. So for more in the markets, let's bring in Thomas Hayes, chairman of Great Hill Capital. Thomas, good morning. Good to see you as always. As we mentioned, markets pointing to a little bit of a lower open this after we closed at record highs yesterday. What do you think's driving the sentiment here? What's the pullback? Is this all about the Delta variant here?
It is about the Delta variant. You also had some news in China overnight that they're doing more crackdowns, so that's got people a little bit spooked. But if you generally look, the customer is in fantastic shape. We are going to see retail sales probably come in a little bit light month on month due to Delta. But if you just take a step back and you look at the Home Depot and you look at the Walmart earnings, they both beat on the top and the bottom line. The core difference was that Walmart beat on same-store sales expectations. They were up 5.2% versus 3.3%. And Home Depot missed on same stores. They were up 4.5 versus 5%. So that's kind of a disappointment. They made up for it. Home Depot did on average ticket sales up 11.3%. I wouldn't be surprised if lumber had something to do with that and some of the inflation from supply chain bottlenecks. And with Walmart, the average ticket was up 6%. The thing about Walmart, though, that wasn't as exciting was their e-commerce accelerated. It grew only at 6%. Expectations were a little bit higher. But I think when you compare and contrast these two earnings reports, you have a Home Depot, and you pointed to the stock market being up 100% since the pandemic lows. Well, Home Depot's been up 145% since the pandemic lows. So it's had quite a run, whereas Walmart's only up 52%. So I think probably here, certainly the other key difference is Walmart gave guidance, which is a lot more comforting for the market. Home Depot did not give guidance, and the market didn't like that. So if you had to take one or the other moving forward, I think Walmart's probably got a little bit more short-term upside than Home Depot. But on balance, these were good earnings reports.
Yeah, I agree with you. And I think a lot of us were surprised that we got guidance from Walmart for at least the rest of the year, given the fact that a lot of companies have not been doing that, especially retail companies. Let's talk about those retail sales numbers we're expecting. We're expecting those numbers to turn lower for the month of July, maybe falling about 0.3% compared to that 0.6% gain that we saw in the month of June. Is this all going to be COVID related, in terms of the outlook for the rest of the year, given the fact that this is traditionally a really good time for these retail companies? Back to school shopping and summer travel seasons are usually huge boons for these companies. Is that a big concern heading in potentially to the holiday season?
Yeah, the back to school, for sure, this should be a strong time of year. The consumer is very strong. If you look at MasterCard spending from last month in July, apparel sales were up 80% according to MasterCard credit card spending. So, and that's combining the department stores and the online. The department store itself was up 45%. So I think in this short-term Delta uncertainty, I think you could see more sales shift back online. But the consumer, with the stimulus checks that have already been in the system, and now starting in July, you had checks going out to many families that have dependents, $250 or $350 per dependent. So this kind of money continues to circulate in the system, and whether people continue to want to go out with Delta and wear the mask to the stores, or they just redirect their spending back online, I think people are back. And if you look at the savings rate, it shot up to 20% versus 7% pre-pandemic. So that money is kind of burning a hole in people's pockets, and I think they want to get back to normalcy. And we did see in both India and in the UK that Delta did eventually peak around the 50-day mark. We're encroaching on that 50-day mark. We're in kind of the mid-40s since we've had the spike. We're hopeful we'll get a similar pattern where it backs off just a little bit, and that should recover confidence for consumers a bit. We saw on Friday that consumer confidence really did collapse from the Delta. People are worried. People are a little bit disappointed. It's like, when is this going to go away? Another wave. But we can look to UK, we can look to India, and probably take a little comfort. The other thing we saw about Delta, though, and I think was also very promising about Walmart, is they said it didn't really affect their sales, and they're not seeing it dramatically affect their sales. So I do think that will vary by retailer, but to see Walmart come out and say that it didn't have a real big impact as of present, and they weren't seeing it currently, they were seeing more people wearing masks in the store, that's very promising as it relates to retail. But many of these stocks came in close to near or at all-time highs coming into this earning print. So there's a lot of good news already priced in.
Thomas, great insight as always. Thomas Hayes is the chairman of Great Hill Capital. Thomas, thanks so much for joining us this morning.